ஆடியோ கனெக்ட் ஆகல மேடம்.
சார் கேக்குதா?
கேக்குது மேடம். கேக்குது மேடம்.
சரி சார், ஓகே.
ஓகே.
ஹாய் மாதா.
Good morning, ma'am.
Good morning. Hi Bona.
Hi Madhu, good morning.
Good morning. Can we start, Shruti?
One second. Yes, ma'am. Good morning. I think there are only 13 participants, ma'am. Shall we start, or? I think many of not aware about the passcode thing, ma'am. I think we would receive it on the email. Ma'am, you have muted yourself.
I have also shared it in the group.
Okay.
So we'll wait for 2 more minutes and then start.
Okay.
You can start, Shruti. Maybe just proceed.
Shruti, you have muted yourself.
Sorry. Am I audible, ma'am?
Yes, yeah, you are audible. Yeah.
A very happy morning to everyone. We, the Sikasa team 2022-23, jointly with Chengalpattu District Branch of SARC of ICII, takes immense pleasure to welcome you all for the mega event workshop to be conducted on GSTR 9 and 9C by the facilitator CA Bhuvaneshwari ma'am. I, on behalf of my team, welcomes CA Sikasa Chairman CA Madhumita ma'am, a facilitator CA Bhuvaneshwari ma'am, and a branch chairman CA Satyanarayanan sir, and other fellow mates. Now I call upon CA Madhumita ma'am to introduce a facilitator for this event.
A very good morning for everyone present here, all the students, Bhuvaneshwari madam, and everybody who is present here. A very good morning. I'm very glad to say that this is the first program of the new team of 22-23 Sikasa. I'm sure we are going to do a great job in this year, and as we have always been doing in the past. So we are planning to organize various workshops, seminars, mega seminar conferences, etc. For the benefit of students, for the benefit of students community. I request all the students, irrespective of whether you are doing the job or not, to attend the seminar and learn about the things. Two benefits from that: one, it will help you do your job in your office, and another thing is that it will help you in your exams. Definitely it will help you in your exams, because anyway we are going to cover all the subjects. So what I suggest is all the students please attend the seminar, because there are going to be so many seminars which are going to come. So take benefit of all those opportunities that are available with you. And get benefited from that. We are also going to conduct mock tests, etc. for the benefit of students. I urge that all of you kindly attend all those and seek the maximum benefit of the institute and its activities which we are going to do. As Chengalpattu branch, we will be proud in conducting all these activities which are benefiting the students. Now, to say something about the speaker, she is a person who is excelling in GST, and she's a Master of Commerce at the University of Madras. She is a postgraduate. She has done her postgraduate diploma in financial management from the University of Pondicherry. She is an associate member of our CA Institute, and she is an associate member of the Cost Accountant Institute. She's done her independent director qualification from the Ministry of Corporate Affairs. She has headed various committees, subcommittees from our branch. She has been a chairman of Women's Empowerment Committee, Indirect Tax Committee, etc. She has excelled in all those. and she's a consulting person and a speaker in the GST compliances and all the issues. She's a faculty of indirect taxes in the GST for students for intermediate and final level. So in case you have any doubts, you can freely ask her. She's a very nice person, patient enough to answer all your doubts. Next is about her professional work. She's a partner of Madhubalan Associates, which is a big firm handling all the GST and ROC and all the assignments. So even professionally and from a teacher's point of view, I welcome Bhuneshwari Madam to start the seminar workshop.
Thank you, Madhu, and thank you, Shruti. First, good morning to all of you, and I'm very much happy, and really this is my privilege to take up the very first session, student session, after the formation of the new management committee under the chairmanship of CA Satya sir and Sikasa chairperson of CA Madhu, and really thankful for this opportunity given to me. So let me start with the session. I'll share my PPT. Ashruti, my screen sharing is disabled. Can you please enable?
We'll ask the branch to enable it now.
Oh, okay.
Just a minute, I'll arrange for that.
Okay. Hope my PPT is visible now.
Yes, ma'am, it is visible.
Yes. Okay. Um, See, today we are going to discuss on this GSTR filing of this GSTR 9 and 9C for the financial year 2020 and 21. So almost only 5 to 6 days left, because February 28th, that was extended due date given for the filing, which got extended. And this GSTR 9 and 9C, it has underwent major changes during all these years. So right from the implementation phase of GST 2017, we can drastically, there was a great changes in all these forms. The forms got modified. Few options, few particulars are declared as given as optional, and few things are given as mandatory. So all those things we can discuss it today. And 2017-18, we had the prescribed limit of 2 crores for filing the GSTR 9C, and GSTR 9, irrespective of any turnover limit we were forced, it was a mandatory thing to file the GSTR 9 for all registered taxpayers. But from 2018-19, the government came up with a relaxation that only those taxpayers who is crossing the prescribed turnover needs to file the 9 and 9C. So at present, for the financial year 2021, the aggregate turnover limit is fixed at rupees 2 crores for filing of GSTR 9, and taxpayers with aggregate turnover of rupees 5 crores and above have to file their GSTR 9C. So this option is at present applicable for the financial year 2021. And also, of course, the due date of filing 9 and 9C. So hereafter we have to say it as a self-certified GSTR 9C, because the signature of the auditor is no more required for filing of 9C for the financial year 2021, and this got extended up to 28th February 2022. Also, the CBIC, by way of a notification, has exempted all the GST registered taxpayers with an annual aggregate turnover of rupees 2 crores in financial year 2021 from filing your GSTR 9. Before moving into the detailed discussion, let us have a few insights. Now, the section that was notified for filing of these 9 and 9C is section 35, 5 and section 44 of the CGST Act. So, the requirement to get the GST audit and certification done by a chartered accountant or a cost and management accountant, as of now it has stands to be removed. So taxpayers who are having a turnover above 5 crores in the previous financial year, they are required to file the 9C on a self-certification basis. So which doesn't go for the signature of a CA or a CMA. And this change was made applicable only from the year 2021. And because of this change, the 9C form is also to be modified. It was also modified so that it has to support the form, and the tools have to support the self-certification mode for the taxpayer. And these are all because of the outcomes of the 43rd GST Council meeting. And of course, you all know, you're all aware that GSTR 9A has been removed. GSTR 9A has been removed for the from the financial year 1920 onwards. Now, who are applicable, who have to file the GSTR 9A? Previously, composition taxpayers, they were notified to file the GSTR 9A. But from the financial year 1920, we had the new form GSTR 4, which is said to be the annual return form for a composition taxpayer. So 9A also doesn't have any validity as of now. So now coming to the aggregate turnover. So you have to recall the definition of the aggregate turnover, which is prescribed in section 2 subsection 6 of the CGST Act. So what is the aggregate turnover? Aggregate turnover is nothing but the value of all your taxable supply. Those taxable supply can be interstate, it can be intrastate, and exempted supply. Value of all taxable plus value of all exempted supply, value of all export supply, and transactions, interstate transactions coming under the same pan. So these four ingredients will constitute your aggregate turnover. You have to keep remembering this definition, because only when you know what is there in your aggregate turnover, you will be able to fix the limit whether GST 9(9)C is applicable for you or not. You will be able to decide only on the basis of the aggregate turnover arrived. So remember, this aggregate turnover should be looked into as a pan based turnover. If someone has more than one branch in different parts of the country, where he goes for a PAN filing with a single income tax return, he's going to file only one income tax return, but he has got multiple GSTN for all the states located across India. So in those cases, the turnover of all these branches should be consolidated. So in that case, you have to apply the prescribed limit only on those aggregate turnover of all the branches. Now, coming to the items, what are all going to be included under the term aggregate turnover, and what are all going to be excluded from the definition of the aggregate turnover. The inclusions: all taxable supplies other than supplies on which the reverse charge is applicable. So here you don't have to include your transactions on which you are liable to pay the taxes under RCM. So though you are making the payment of taxes, this doesn't mean that this has to be brought into your outward supply. It is still only an inward supply. Only the taxes are paid under the RCM. So these kind of supplies need not be included under the aggregate turnover. And supplies between separate business verticals have to be included. I already told you this is a pan based turnover you have to compute. And goods supplied to or received from the job worker on a principal to principal basis. So these two people will act on a pure agent basis, principal supplying to agent and agent supplying on behalf of the principal. All those things have to be included. Value of export supplies, zero rated supplies, supplies of agent, job worker on behalf of the principal and all exempt supply. For example, any agricultural produces that may be supplied with the branded item, ready to eat food items, etc. Let us take the example of a supermarket which is going to sell all branded items, and along with they also sell the fruits and vegetables, agricultural produce, which are exclusively exempted from GST. So all these exempted supplies should also be taken into, and all taxes other than those covered under GST. So except GST, whatever you have paid as a taxes, we can say that taxes which are not subsumed into GST. So it can be your customs duty. Still we have the levy of custom, and all those taxes have to be included within your aggregate turnover. Now coming to the exclusion part. What are all the items that have to be excluded while arriving at your aggregate turnover? Inward supply, on which you are liable to pay under RCM. See, your outward supply, which is liable to be paid under RCM by the recipient, will be considered as an exempted supply, and you have to include that. But inward supply, on which you are liable to pay under RCM, have to be excluded. All taxes, cess, which are charged under GST, it can be CGST, SGST, IGST, and even compensation cess. All those things which are leviable to GST Act should be excluded. And finally, activities which are neither treated as a supply of goods nor treated as a supply of services. So the negative list, items which falls under schedule 3 of the CGST Act, non-GST supply or no supply, no GST leviable on it, all those transactions have to be definitely excluded. So this is only the brief point that I want to discuss before moving into the practical explanation of the form. So now let me share the GSTR 9 Excel form with you. So I have shared my GSTR 9 offline tool with you, and this tool which is applicable, you can download it. You can download always. Please try to download the latest version from the website, because then and there the changes goes on in the utility form. So it's always better to download the latest version. So this is applicable for the financial year 2021. So you can select the year. So right from 1718 the facility has been given. So you can just select the year 2021. You can give your GSTN and then start filling the form. So this is the first table, part 4 table. A very important table, because this table you have to declare all the details of your outward supply. And remember, GSTR 9 is an auto populated item. So almost all the figures in GSTR 9, whenever you log in and you open the GSTR 9, you will be having the figures which are already auto populated. All these information will flow from the GSTR 1 which you have already filed during the financial year. So right from April 2020 up to March 21, what are all the...
Sorry, ma'am. Ma'am, your screen is not visible, ma'am.
1 second. Okay, is it visible now?
No bonus, still it is not visible.
Yes, ma'am. It
is visible now.
Okay. So this the first part this requires only the very basic information. You have to give your GSTN and the financial year for which you're going to fill up the form, and then you have to go with this part 4. Part 4 is a part table number 4 is a very important table where you are required to declare all the outward supply. And as I told you, all the information flows from the GSTR1 which you have already filed for the financial year. This part 4 requires the details of your outward supply for which tax is payable. See, anything that doesn't have a tax impact, any supply like exempted, nil rated, zero rated supply without payment, all those things are required in the next page. So this part 4 requires information only for which it has a GST impact. And also this comes along with the credit note and the amendments, credit note, debit notes, and all the amendments in case you have done in the during the financial year. See, you have to be very careful with the words during the financial year. See, in this form they have mentioned during the financial year. It has to be understood as the returns which are filed for a financial year. If you literally take the meaning of during the financial year, then the March month return which is supposed to be filed in April, which comes in the next subsequent financial year, that has to be omitted. So the understanding has to be in a manner that all the returns which are filed for a financial year from April to March 2021. And 4A entry, you have to declare all the supplies which are made to end consumers or unregistered person who do not have a GSTN number. So we can call them as a unregistered persons. And sometimes people, they don't give their GSTN also. Some recipients will have a GSTN but they don't provide us. In those cases also, since we don't know their GSTN, they will be treated as a B2C supplies unless and until they insist on giving us the GSTN. So irrespective of the nature of supplies, whether it is intrastate or interstate, and the quantum of supply, all those things have to be declared under 4A, B2C supplies. And you have to be very careful with the values that are declared in your invoices. Those will get reflected in your books of accounts. Those invoice value, those taxable value which are declared in your books of accounts will be filed in your GSTR 3B, and the value which is reflected in your books of accounts, taxable value, invoice value, whatever it is, that will be declared in GSTR 1. And finally, values declared between GSTR 1 should match with GSTR 3B. So always please go for a monthly reconciliation. So then and there, if there is any errors or omission in particular month, immediately in the following month this can be rectified. So it is always better to go for a monthly reconciliation. And 4B, this entry deals with supplies which are made to person having a valid GSTN number. So we can call them as B2B supplies, registered person to registered person supplies. And 4C, here you have to declare the zero rated supply comprising of exports of goods, or it can be exports of services, but exclusively out of India. So please remember, this 4C will not include the supplies made to a special economic zone, which is geographically categorized as IGST sale, and you need not include it here. We have a separate entry 4D below. For there you have to declare all your cess supplies. So exports are permitted in two ways. So one is with the payment of tax, and the other one is by availing LUT, letter of undertaking, and going without payment of taxes. So now 4C, this entry have to cover only exports on which payment of taxes have been made, not without payment. As I told you earlier, without payment transactions are going to get covered in the next part 5 table. So part 4 only deals with transactions which have a GST impact. So ultimately whatever exports with payment are done have to be declared in 4C. Coming to 4D, supplies to CES, Special Economic Zone, zero rated supply. And this Special Economic Zone supplies, it can be a supplies made to a developer of a CES unit, or it can be a unit in the zone itself, unit in the Special Economic Zone itself. Whatever it is, you have to include those supplies. made to the special economic zone. Even supplies made by one cess to another cess or by a DTA unit to a cess zone, that has to be included here. And remember, 4D also does not include supplies to special economic zone without payment of taxes. So always you have to keep remembering payment is there. Payment of taxes is made for whatever the value declared under this table part 4. Coming to 4E. 4E, deemed exports. See, now section 147 of the CGST Act, the government has prescribed certain supplies of goods that are considered as a deemed export. Now, what are those? When the goods supplied by these people, taxpayers, they will not leave India. They will not leave the outside borders of India, but the payment for those supply have been received either in Indian rupee or in convertible foreign exchange, and those are manufactured within India. So the deeming fiction for this kind of supply of deemed export is that this is going to allow a taxpayer to enjoy all the tax benefits that are available as if the taxpayer is a zero rated person, zero rated supplier. So these people also will enjoy the benefits given to the zero rated supply. And 4F, please recall the provisions of section 12 dealing with the time of supply of goods and provisions of section 13 dealing with time of supply of services, because tax is payable on an advance even though supply is pending. So even though supply has not been done, but still you have received the advance, it is definitely leviable to GST at the time of receipt as per the section 12 and 13. So for this you can have the take up the reference of the receipt vouchers. Whenever you receive money without a supply has been done, in that case you have to issue a receipt voucher. So receipt voucher can be taken as a reference, and also subsequently we received a notification number 66/2017 which says that any advances received for goods need not be taxed on the receipt. So only when the supply has happened you can bring it under the ambit of GST. But when you receive any advance for services, definitely on the date of receipt you have to pay along with the GST. So now this advances can be considered only for services, which are taxable under GST is only for services, not for goods. And 4G, reverse charge items. So 4G, you have received any inward supply for which you are liable to pay reverse charge. Reverse charge provisions are guided through section 9.3 of the CGST Act and section 9.4 of the CGST Act. See, section 9.3 list out, the government has prescribed a list of services which are mandatorily have to fall under the RCM provision. And 9.4, as of now, the government has prescribed special category of taxpayers. Who are they? The people who are coming under the construction services, builders, promoters, etc. Whenever they purchase from any unregistered suppliers and that limit is below the fixed percentage of 80%, in those cases you have to go with the reverse charge. So all those items is going to get covered under 9.4. And 9.3 we already have a listed categories of suppliers coming under RCM. So you have to decide on all the advances. Even in this case also you could have received any advances from the unregistered supplier, that is also liable for GST under RCM. And sometimes there might be debit notes and credit note also in these inward supply. So you can also net off those debit notes and credit notes, and you can have a reference to the payment voucher. Whenever you are making payment to unregistered supplier, since they are not going to issue any invoices, they are not a registered person, not going to issue any invoices, you can have a reference to the payment voucher. So all these are documents which you have to simultaneously keep with you while filling this GSTR 9. Almost you could have paid the taxes on a monthly basis. You could have paid your RCM in your 3B return, but still these documents can be taken as a reference. Coming to 4i and 4j, 4i and 4h is your subtotal. So all those total will get auto-populated, and 4i and 4j, this will deal with your debit notes and credit notes, which are in relation to the supply captured above. So all those supplies from 4b to 4g, whatever debit notes, sorry, 4f, whatever debit notes and credit notes are there, these are going to be captured here. But remember, only with the suitable GST impact on it. Without any, if the credit notes and debit notes are without any GST impact, you have to treat them as a commercial or a mere financial credit notes. Those things need not be declared here. So any commercial or accounting credit and debit notes which do not have the impact of GST should not be adjusted here for arriving at your taxable value and taxable amount. And 4K and 4L, these two entries deals with the amendments that you have made during a financial year. Say all these amendments, there are two types of making the amendment. One, the amendment can be made within the financial year itself, or second one, the amendments are made after the financial year within the prescribed time limit, within the ceiling limit. So as of presently, we have the September month return, due date of filing the September month return as the ceiling limit. So there are two options. Now I am going to talk only about the option number 1, where amendments are made within the financial year. Say for April you have made within amendment in December, and for December you have made in March. So these are all the things that are going to get auto populated in this K and L. So it can be added or deducted. And 4M is a subtotal of I to L. So again, debit notes, credit notes, amendments, everything will get consolidated here. And supplies and advances on which you have to, on which the taxes have been paid. Again, this is a grand total of all the above mentioned items. So this entire part will speak of your taxable turnover and the taxes that you have paid as CG, SG, IG or cess, compensation cess. So now moving on to the next part, part 5. Part 5. Part 5 deals with the outward and inward supply made during the financial year but without any tax impact on it. So it has been the second category, without any GST impact. So almost all the particulars which we have discussed in part 4, the same is getting repeated here. Without taxes, zero rated supply without payment of taxes, supplies to special economic zone without payment of taxes, supplies on which tax to be paid by the recipient on reverse charge basis. So this you can take up the example of a goods transport agency. GTA will be having a valid registration number, but still they have the option to go for reverse charge. So these people may not collect the taxes on their forward supplies. So now they will issue an invoice mentioning it as GST to be paid under RCM by the recipient. So this is mentioned in the invoice. What will happen? Now the recipient have to pay the GST on his inward supply under RCM. So now how the supplier is going to deal with this kind of transaction? This transaction, it is taxed on a reverse charge basis, but still this constitute the outward supply for the supplier, but this will be categorized under the exempted supply. So in our 3B return, we have the option only as exempted and zero rated. So you can categorize this transaction, this supplies under exempted in your 3B return. All those outward supply where the recipient is liable to pay the taxes going to be declared in 5C. And then 5D exempted and nil rated, and 5F we are going to talk about the non-GST supply, which includes no supplies. So goods and services which are not leviable to GST. Example, sale of petrol, sale of diesel, still which are not under the ambit of purview of GST, and even high sea sales where transactions are done in the middle of the sea, not within the boundaries of any country. So all those things can be categorized as non-GST. And 5G is a subtotal of all those supplies without taxes, and here also you have the credit notes and debit notes with respect to the values transactions which are captured above from 5A to 5F. If you have any credit notes and debit notes, all those can be declared here. And here also you have the similar amendment column, amendment done during the financial year from April to March, whatever amendment done within the financial year, all those things will be captured here. So finally you arrive at the turnover on which tax is not to be paid. So this will give your turnover without taxes. And total turnover, now this is a gross total. Now this total turnover will include your taxable turnover plus non-taxable turnover. Both are included here. So moving on to the sixth sheet, part 3, details of the input tax credit for the financial year. See this page, this part is a very important because it always talks about the input tax credit. Total input tax credit availed by the taxpayer in 3B return, and this is going to get auto populated in your 6A. So based on all the information that you have declared in 3B, see all total eligible ITC. This is the column that you have filled in your 3B return. Now the figures from those 12 months consolidated will get captured here, and it is going to get auto populated here. You will not have the option to edit or any make any modification. So it is a freezed. This particular column is a freezed column. So whatever total ITC in 3B, it is going to get auto populated here. Now the government wants a very clear picture of the ITC that you have availed. So now they are going to ask you for the breakup of all the ITC that you have availed. So whether the ITC is by way of inputs, is availed through inputs, whether the ITC is availed through inputs on services, or whether the ITC is availed through inputs on capital goods. As of now, ITC is categorized into only 3: inputs, input services, and inputs on capital goods. So all those things have to be bifurcated. Since the government wants a very clear picture of these ITC, you have to declare it here, give the breakup. And 6B will be the ITC that you have availed from the registered suppliers. Inward supply other than import, liability, reverse charge, all those things have to be declared. So regular taxpayers, regular suppliers providing you the ITC have to be declared here. And 6C, this is going to ask you information about the ITC that you have availed by making payment under the RCM. So RCM, already I told you, there are two categories. One is from the registered suppliers, the other one is from the unregistered suppliers, 9.3 and 9.4. So you have to keep remembering 9.3 registered suppliers have to be filled in 6D. Okay, inward supply received from registered person, and RCM paid for supplies received from unregistered person, 6C, that has to be declared here. So 6C deals with 9 subsection 4, 6D deals with 9 subsection 3 of the CGST Act. So similarly, you have the breakup for inputs, services and capital goods. And 6E is about the import of goods including supplies from a special economic zone. So whenever you have paid the IGST to the customs, that would have been mentioned in your bill of entry. So the document that you have to refer here is your bill of entry where you have paid the IGST. Those things to be mentioned here. You also, since that will not get covered under services, you have to pay the, since it is only for goods, you have to categorize as either it is an input or you have to categorize as either a capital goods. And import of services. See, import of services is given here separately. Many of our clients would have imported the service from people who are located abroad. Say they may be a architect providing services from abroad, or they may be any software consultant or anybody who is providing services from abroad, but the payment have been made in any foreign currency. You say that as a import of services. So import of services, the recipient in India who is located in India is liable to pay under RCM. So those inputs which you have availed as ITC also have to be declared here. And input tax credit received from an input service distributor. Hope you all aware of this category of taxpayer, input service distributor, who distributes all his ITC proportionately to all the branches located across India. So it's a separate kind of registration, and those ITC that you have received from your ISD have to be declared here. And amount of ITC reclaimed other than the B above. So sometimes in case of non-payment by the supplier, the recipient is liable to reverse the ITC, and then he can along with interest, and then he is allowed to reclaim. So all those reclaim can be mentioned under this column 6H. And you have the total, and you have the difference of one I and A. So this difference is nothing but where the breakup that you are giving to be matched, always to be matched with the ITC that you have claimed in your 3B. If you are not giving the breakup properly, definitely you will have the figures in this column 6J. Definitely it will be a positive figure or a negative figure. So please always be careful that whatever ITC that you have availed in 3B, the breakup should be exactly given to match the total of the 3B ITC. And 6K and 6L, transitional credit. As of now, we don't use this, because this transitional credit we have been using this only for the first year after the implementation of GST. All those credits that have to be transferred from the erstwhile loss, like your service tax, like your VAT, or central CST, whatever it is, all those ITC which have been transferred from the erstwhile laws to the new law GST, and you are availing those ITC, we were declaring it here. But since it is almost 4 years, we don't have the time limit. It's a time bar. We don't have any time limit to avail the transitional ITC. So it is left to be blank. And then any other ITC avail but not specified above. Suppose if you have availed any ITC which does not fit into any of the above clauses, let us say it can be any residuary clauses, any special cases of availing the ITC, you can mention it here. So you have the subtotal, and then you have 6O, which gives you the total ITC. Total ITC availed in all your GSTR 3B return. Okay, now moving into the next part 7, part 3, table 7, part 3, details of ITC which are going to be reversed for a financial year. See, all this particular table 7 entirely deals only with the reversal of ITC as per rule 37. So hope you remember what is rule 37. Rule 37 is the supplier, the recipient have to make payment within 180 days. The recipient have to make payment to the supplier within 180 days. Suppose if he is not making payment, then the recipient have to reverse the ITC along with the interest. So this reversal prescribed under rule 37. If you have reversed any ITC, you have to mention it here. Rule 39, which deals with the credit notes which are issued to the input service distributor. I told you in the previous table, you are going to avail the credit given by your ISD, input service distributor. Now subsequently, if those ISD have issued any credit note, you are also liable to reverse those ITC. You are also liable to reverse those ITC. So those reversals are governed under rule 39 of the CGST. And rule 42, what is rule 42? Rule 42 deals with the inputs on goods that are exclusively used for exempted supply or for non-business purposes. Say you are using the goods for personal purposes. Say for example, you have procured 10 laptops. Out of 10 laptops, 1 laptop is taken by you. You're taking it to your home. Only 9 is being put into office use. So you have to proportionately reverse the ITC belonging to one particular laptop. So all those reversals are governed by rule 42. You have to disclose the reversals here. And then rule 43 also deals with the reversal for exempted goods and goods used for personal purposes. But these are all capital goods. That is the only difference between rule 42 and 43. 42 deals with only inputs on goods. 43 deals with inputs on capital goods. There is a difference between these two. So if these are done, if these are any reversals are done by you during the financial year, you have to report it under this table 7. and then reversal of transitional credit. So during the period 2018, we had received many notices from the department asking us to reverse few credits, transitional credits avail. They have listed out few reasons. They say that education cess, service tax, education cess, or surcharge on education cess is not coming under, is not allowed to be taken as a transitional credit. So you have already availed. So please reverse. These are all few notices that we have received during the year 18, and so finally in the year 2017-18, while filing the annual return, we have gone for reversal. But as of now, the time limit is over, and we are no more availing the transitional credit. So these two columns also, it can be left blank. We are not using it anymore. And you have the total ITC reversed. Table 7I, you have the total ITC reversed, and net ITC which is available for utilization. So this is the ITC which you have utilized, exclusively utilized in your GSTR 3B return for making payment of your output taxes. So that is with table 7. Moving into table 8, part 3, details of ITC for the financial year. A very important table, because why I say this as a very important table, you have to literally go with a flashback. You have to flash your memories, so that what are all the restrictions that have been imposed on ITC by way of rule 36(4). You have to recall all those things, then only you will be able to fill this table very correctly. Table 8A, this table 8A, this consists of your ITC which is appearing in your GSTR 2A. Since GSTR 2A is a inward supply, will get reflected by your inward supply, and the ITC that you are eligible to claim is going to appear in your GSTR 2A. Again, this is a auto-populated item which we cannot edit or which we cannot make any changes. Now, how this GSTR, the history of GSTR 2A. So while filing, we'll start filling this row. We have to recall the history of GSTR 2A. Why I say history is that earlier rule 36(4), when it was introduced, the government were insisting on us to avail 20% of the value of the ITC extra. For those invoices which are not reflecting in your 2A, you are allowed to avail up to 20% extra. So there was a cushion limit given for the taxpayer to enjoy the 20% extra. And then subsequently this got reduced to 10%. And then again subsequently this got reduced to 5%. And finally the government came up with a restriction that whatever available in 2A only you are allowed to claim. And now finally in 1st January 2022 we got this new GSTR 2B, which says that so you have to switch over from 2A to 2B. You have to switch over whatever available in 2B only you are eligible to claim. And then finally this budget 2022 came up with a restriction again that 2B it will be there, but still you have to check whether it is restricted or not. Only if it is not restricted, you are allowed to claim. If it is restricted, even though it is reflecting in your 2B, you are not allowed to claim. So this is the history that you have to keep in your mind while filling this table, because rule 36(4), the limit was 10%. Between 1st January 2020 and up to 31st December 2020, it was 10%. So when you are filling the form for 2021, from April to December, you have to keep in your mind as 10%. And then from 1st January 2021 to 31st March 2021, it was 5%. So 10 for 9 months and 5 for last 3 months. And also remember, it was only GSTR 2A up to July 2020. So from April 2020 to July 2020, it was 2A. Again, there was a change. You have to look into 2B from August 2020. So whatever it is, what we can do is that always please download GSTR 2A month-wise, download 2B month-wise, take up the total. So based on this based on this applicability, 10% up to December, go for 5% up to calculate 5% up to March, and then 2A up to July, and then please look into 2B from August to March. So all those workings should be done while filling up this table. So please be very careful while filling up this table, part 8 and A. And sometimes you could have availed ITC only in the next financial year. Sometimes ITC input tax credit could have been missed, omitted to be taken, since you have been prescribed the time limit of September month return, which is going to be filed in October 20, the due date. Up to that period, you have the time limit to avail. Those ITC can be availed in the next financial year also. So you have to mention those ITC which you have not availed in the current financial year, subsequently availed in the next financial year, have to be mentioned here. Now, the climax of the story is 8D. Coming to 8D, the difference. So always please keep praying God that this figure reflecting in 8D should be a positive 1. If it is a negative 1, what will happen? If it is a negative 1, you have to reverse the ITC, which means you have claimed the excess of ITC, the avail excess of the ITC, which is reflected in your 2A or 2B, whatever the case may be, you have to reverse it. So always keep praying that this 8D is a positive figure. Only if it is a positive figure, it means that you have not availed some ITC which got reflected in your 2A or 2B. Ideally, this clause should be a positive one, because all inward supplies are reported in 2A. We might not be eligible to claim them. There might be some blocked credits. There might be some credits which are used for personal purposes which we are not allowed to claim. So ideally this should be a positive figure. So in major circumstances, this GSTR 2A will contain the blocked credit under section 17.5, or it may contain the non-business credits under 17.1 of the CGST Act in addition to those eligible credits. So please be very careful while arriving at the figure 8D. And then going for 8E, ITC available but not availed. See, most likely reason for such non-availment would be the failure to take the ITC during those financial year, or the lapse of time limit. The September month have been lapsed. So before that you are not aware, you are ignorant, and you are not claiming the ITC. So this is the reason for the figures that you are going to declare in table 8E. The time limit specified in section 16.4 of the CGST Act may not have been utilized by you properly. And 8F 8F ITC available but ineligible. So you are now categorizing your blocked credits here. So if any ITC that has reflected in your 2A or 2B, but still you have not availed, because you are considering it as an ineligible item and you are not availing. So that is 8F. And 8G IGST, which is paid on import of goods, and 8H is IGST credit availed on import of goods. See, there is a look at the words very carefully. There is a difference between 8G and 8H. 8G IGST, which is paid on imports. See, whenever your goods are in the customs frontier, you have paid the IGST. So the bill of entry have been done, all those things are done, but the goods have not been shifted to your premises. Maybe the goods are still in transit. It will take another 4 to 5 days to reach your premises. And as per section 16 condition, you are allowed to avail ITC only when you have received the goods. Until you have received, you are not supposed to claim ITC. So this may be the timing difference between these two. Import of goods, IGST has been paid, but you have not availed. Why you have not availed? Because goods have not been delivered to your destination, to your premises. So there might be some cases like this where you have to declare these things, and this will be reflected as a difference in 8A 8I of this table. And ITC available but not availed on import of goods. So this also again may be a reason for goods might have been imported for any personal purposes. Goods might have been not intended to use for in the course or furtherance of the business. It is used for non-business purposes, or goods are imported for making exempted supply, or goods are imported and it becomes a blocked credit under section 17.5. So all those figures can be filled in 8J. 8K, the total of ITC that have to be lapsed in the current financial year. So total of row E, 8E plus 8F and 8J. These are all the ITC which you are not going to utilize in the current financial year. So this is the total of the ITC which you have not utilized. So now this is with the ITC table. Moving on to the payment table. Table 9. This table automatically picks information from the payment table of your GSTR 3B. So all the 12 months consolidator put together the taxes that have been paid. You are not allowed to edit the payment done by you, but tax payable figures you can modify it, but if you modify also it will not have any validity. Whatever output tax that is listed out in tax payable column, that has to be entirely discharged through ITC, or it can be discharged through payment of cash. So all those things, since cash and ITC utilization are getting picked up, will flow from your GSTR 3B. If you alter tax payable column also, it will not have any meaning. So the only thing that you can do in this table is please check and please match tax payable is matched with the paid item, paid through cash or paid through ITC. Both are getting matched with each other. And table 10, moving on to the next table. This is again a very important table where this table is going to deal with all your amendments made during the subsequent financial year. So far I said part 4, table 4 and table 5, we are only dealing with the amendments or any supplies that are declared during the financial year. Now the only table which gives us space for providing all the amendments that are made in the subsequent financial year, because the provision says up to the due date of filing September month return you have the time limit. So ultimately you could have made some alterations, you could have made some amendments, you could have made some updations in your already filed returns during the financial year, that is from April 2021 to September 2021. So all these 6 months have to be, any changes that you have, any amendments that you have made should be declared here. And you can declare these amendments by netting of your debit notes and credit notes. So you can finally arrive at the figure. Again, you need not go for the declaring the debit notes and credit notes separately. And table 12, row number 12 and row number 13. Row number 12, reversal of ITC availed during the previous financial year. Suppose you have considered one particular ITC as eligible, you have availed it during the year 2021, and finally after April you come to know that this is an ineligible item, you have wrongly availed it and you have reversed it in your GSTR 3B return. Those figures have to be declared here. Reversal of ITC during the next financial year. And ITC availed for the previous financial year. Also there might be situations where you could have missed out availing your ITC during the financial year 2021, which you subsequently notice from April to September, they bring to your notice that this ITC is not availed. So again you avail those ITC in your 3B return. The 3B return for the financial year 21-22, those ITC have to be declared here. So these are all the information which you have already declared in your 3B return, but still you are elaborating it for to arrive at the final ITC figures that you have arrived, or final taxable supplies that you have, taxable and non-taxable supplies that you have arrived. Moving on to the next table, table 14, particulars of the transactions for the financial year declared in the return of the next financial year. Now this may be because of the differential taxes paid because of the amendments that you have made in the next financial year. See, the taxes could have been already discharged by you during the next financial year. Say taxes pertaining to 2021, but still it has been discharged in 21-22. But you have to give the information. You have to declare those information intimating that these are all the payable because of the amendments made, and I have finally paid the taxes, and I have finally paid the taxes. So all those declarations have to be declared here. And table 15, this deals with all your demands and a refund. So refund claim will be the aggregate value of the refund claims filed in a financial year, and this is going to include the refund which have been sanctioned or which have been rejected or which have been kept pending for processing. Also, refund sanction will mean the aggregate value of the refund sanction orders. So you have to consolidate all the refund sanction orders. RFD 06, that is order issued for as a final refund acknowledgement. So you have to consolidate all those things. Refund pending will be the aggregate amount of in all the refund application for which acknowledgement has been received. and this will exclude the provisional refund. So in case you have received any provisional refund order, that has to be excluded from this. But remember, these are not going to include any non-GST refund claims. Only the refund claims which are admissible, sanctioned and allowed. All these data are to be given here. And finally 15E and 15F, this row it's slightly the vice versa of the refund. Refund is the government providing you the money, and demand is the government wants the money from you, which means any order has been passed to you for which you are liable to pay some amount as a demand. Any demand has been raised. So aggregate value of all the demand for taxes for which an order confirming the demand has been issued by the adjudicating authority or any person, that has to be declared here. And aggregate value of the taxes paid of the total value which is confirmed as a demand should be declared in 15E here. And also aggregate value of the demand which is pending for recovery. See, they have issued you a demand, 1 lakh rupee demand has been issued, out of which you have already paid 50,000 rupee. So balance 50,000 rupees yet to be recovered from you. That has to be declared in 50E. Pending demands in 15E. So this is with regards to the GSTR 9 table. And then table 16. Table 16 part 6. This information you have to declare your something about your inward supply. See, already in our form 3B we have one particular table which requires information for all the inward supply which is received from a composition dealer, which is received from a composition dealer, or is exempted inward supply or non-GST inward supply. We already could have declared. So information should be, reference have to be taken from those tables in GSTR 3B, and you can consolidate the figures. Supplies received from a composition taxpayers. Deemed supply under section 143. What is this deemed supply received? See, section 143 says that whenever goods are sent to job worker, and if it is not getting returned, say for capital goods it is time limit prescribed is 3 years, and for normal goods inputs it is prescribed as 1 year. Suppose if you are crossing the limit and still the goods are not returned, you have to treat this as a supply under GST. This is what a deemed supply concept under section 143. Suppose if you have any inward supply in those category, all those things have to be mentioned here. And goods sent on approval basis but not returned within the prescribed time limit of say 6 months. Again, you have to treat this as a supply under GST. So all those are very rare cases which happens for a taxpayer, a very rare phenomena which happens. So these particulars have to be declared here. And then moving to the HSN table, the last two table 17, HSN table. This table requires information about HSN code of your outward supply. See, there has been a very drastic change in providing the information on HSN code also. Previously, we had a 1.5 crore slab limit or something. Now, presently, the slab limit is prescribed limit is rupees 5 crore above and below. If you are a taxpayer having 5 crore and above, definitely you have to mention 6 digit of HSN code. Whether it is a B2B supplies or B2C supplies, you have to mention 6 digit of HSN or SAC code. If you are a taxpayer falling below the prescribed limit of 5 crore rupee, if it is for a B2B supply, you have to mention 4 digit, and for B2C it is optional. They say it is optional. So anyway, you have to keep remembering that 4 digits of HSN or SAC code is mandatory. Also, now the GSTR 1 is also capturing information on this HSN code or SAC code on your outward supply. I think up to 2019 we never had this as a mandatory, but thereafter by way of a notification the government has issued this, that above 5 crore and below 5 crore this 4 digit or 6 digit is a mandatory requirement of furnishing your HSN code or SAC code. And the final table, last table, table 18 part 6, which deals with the HSN code on your inward supply. So again we have a relaxation, only one relaxation in furnishing the detail on this inward supply. The government says that the total of your invoice value, say it is 100%, in case if any of your one particular inward supply is exceeding 10%, is exceeding 10% of your total invoice value, those invoices alone, those inward supply alone have to be declared under this particular table. Say for example, 1 lakh is your total inward supply. I have an invoice worth 20,000 rupee, so which is exceeding 10% of your total inward supply, then the details of that particular inward supply have to be declared here. I mean the HSN code or SAC code of that particular invoice have to be declared here. So this is with regards to GSTR 9. So you just GSTR 9, since it is getting auto populated, it is very easy to fill up the form online itself. You don't have to go for the offline utility, unlike 9C. You better fill the form online so that you will have a check then and there, and then you can upload. Similar to the uploading of the monthly returns, you just use your OTP or digital signature to validate and then upload. And remember, 9 is entirely the responsibility of the taxpayer himself. And also 9C is also now made the responsibility, entire responsibility, because it is a self-certified statement. Previously, it was a certification done by a CE or CMA. Now it is entirely a self-certification. So with this, I am just closing this 9 Excel. Let me open the 9C Excel. I just want to stop here in case if you have any doubts in this 9, please let me know so that we will clarify and then proceed with the 9C.
Ma'am, Balamurtha has posted a question in the chat box, ma'am.
Yes, ma. I'll open the chat box. We have filed the amount double time in B2C in our GST return. Can we modify the amount in GST in 9, and after that we will file 9C? So double time in your GST return, which means can I take this as your GSTR 1? You have declared it as double time, or 3B? Yes, Balamurtha, can you? Okay, GSTR 1 you have declared it, yes. As I told you already, this GSTR 9 is going to pick up all the information from GSTR 1 only. So again, in B2C category, you would have had this double time. So what happened, what can be done is that you can just erase those figure. You can just remove those figure in B2C column, and then you can give your original data. That is, you can remove the excess declared value and you can give the original figure. Definitely when it is getting notified, because when you edit any item in 9, this will be in red color. So have you seen that? So you have to be notified to the department. Maybe department in a future date they may arise you any question, but nothing wrong in that. We can answer, we can give an answer, we can give a valid reply to them that it's only a human error, erroneous things which have been declared in GST, and it is rectified in your GST 9. Yes, you can do that, ma'am. You can do that. Or the other way around, if you want to go a very legal way of filing your 9 and 9C, you just completely omit everything in 9, and then in 9C you can give the reason why there is a excess turnover declared. Both options can be taken. Both options can be taken. If you want the 9C to be very clear, do all the amendments, do all the changes in 9 and file the return. Or otherwise, if you want them to get notified because of it's a minor mistake, it's only a minor mistake. If you want them to get notified, better you can declare it a 9C also. But in few cases, we don't go for 9C, right? Since the ceiling limit is only 5 crore rupee and above, we don't file 9C in few cases. So in those cases, it is better to complete everything in GSTR 9. Okay, I think another question from Raghuram. Is it mandatory to declare HSN wise details for inward supply? Yes, I told you initially the government came up with the notification to declare HSN for inward supply, but subsequently they gave a relaxation telling you that any invoice value which is exceeding 10% of your total inward supply, that alone you can mention the HSN code. Yes, that alone you can do. Yes, any other questions?
Yes, madam. I have posted a query in chat box.
Ma'am, good morning, ma'am.
Very good morning. Nice going.
Thank you, ma'am. Ma'am, where to show the previous year amendment in GSTR 9? Ma'am, is this amendment done for 1920?
Yes, madam.
Okay, ma'am, if it is done for 1920, then the system GSTR 9 itself will not capture these information, ma'am, based on
Correct.
the date.
Okay, okay.
If it is
So no
B2B, it
need
will
to
not
give.
get captured. Yes, ma'am. So we need
Okay.
not worry about that.
Yeah. Thank you, madam. Thank you so much.
Thank you, ma'am. Okay. So let me proceed with GSTR 9C. Okay. Is my 9C visible to you all?
Yes, ma'am.
Yes. Okay. So this 9C is a reconciliation statement where in case you have any differences of turnover, so which is not notified, which is not intimated by you to the department through GSTR 9 form, you can very well intimate this discrepancies in 9C. Maybe everything, if it is for a very valid reason, say the differences arise because of any previous year turnover getting included or any foreign exchange differences. So although there are few possible reasons which are again reflected, getting intimated, mentioned in your table 5A. So all those things can be mentioned so that you provide and you prepare a reconciled statement reconciling your turnover between the books of accounts and the GST turnover, the return that the values that you have declared in your GST are returns, and then the value declared in books of accounts. So both these have to be consolidated, reconciled, and you are going to give the effect in this GSTR 9C. So the first table, the part A deals with a very basic information like you have to provide your GSTN, and see in this utility you still have this row. As a person making reconciliation, same person was conduct the audit. But for financial year 2020, we are never going to use this audit because no more audit certification need to be done by a C or CMA. So this is not required. But when you select the financial year as 2021, immediately this will get disappear. So now this tool was equally made applicable for 17, 18, 18, 19 also. So they have given this feature. So immediately when you select 2021, this will get disappear. So the act that you are liable to make this reconciliation statement alone, that alone you have to mention. So legal name and trade name, a very simple part A where it requires to capture only your basic information about your business. And moving on to table 5 part 2, this is the very major statement. This just going to show you the reconciled turnover between your books and your GST returns. Now this table 5A, the turnover that you are going to declare here is the turnover picked from your audited financial statements, and that has to be declared here. See, remember, there might be cases where, as I told you previously, multiple GSTN state-wise registrations many taxpayers could have obtained under the, which are coming under the same PAN. So those persons or those entities, they will have to internally derived their GST and wise turnover, and they have to declare it here because the audited P&L will consist of the turnover combined of all the other entities. So say 3 or 4 branches, all the 4 branches put together, you will be arriving at the audited P&L. But for the purpose of declaring it here in this GSTR 9C, because 9 and 9C have to be prepared and uploaded GSTN wise, not for one PAN wise. So if you have 3 GSTN number, you have to prepare and upload 3 9C and then 3 9C also. 39 and 39C. So in those cases, you have to internally derive at the turnover which is applicable for one particular GST and state-wise, and that have to be declared here. So in those cases, you can better go for the information that flows from your trial balance of the respective GST. Since there will be only one consolidated P&L, you may not be arriving at the particular turnover. So better you can go for the trial balance of those respective GST number. And also the taxpayer is required to include few indirect incomes like it can be dividend, it can be interest, any foreign exchange fluctuation, or any profit on that arises from the sale of fixed asset. All those incomes can also be, should be included here. So 5A is your turnover. And 5B. 5B, this particular row asks you information about the unbilled revenue. Unbilled revenue is a revenue which is recognized in the books of accounts before the issue of a proper tax invoice or at the end of the particular tax period. See, whenever there is an accrual basis of accounting, revenue is recorded in the books of accounts first. Say in the previous financial year you have recorded the revenue, but in GST this has to be recorded only in the subsequent financial year. So now all those information, unbilled revenue particularly at the end of the financial year, have to be declared here. Also you should have a relevance to row number 5H. These are all the unbilled revenue at the end of the financial year. So which means that in the current financial year 2021, you have recognized the revenue based on the accrual concept in your books of accounts, but for which GST invoice or GST taxability arises only in the next financial year. So it's like opening and a closing. So 5B should have a relevance with 5H. You should compare and you should provide the figures here. And 5C, unadjusted advances at the end of the financial year. So again you should have a relevance to row number 5I, unadjusted advances at the beginning of the financial year. See, there might be few cases where advances could have been received, and based on the notification number 66, we could have booked those as a taxable income under GST. But still, as per the books of accounts, since the supply is not done, these will be still kept as advance received under your current liabilities, pending to be booked as an income. So in those cases, these advances can be taken up here, because these are all the only things which will make a difference for your turnover between the GST and your books of accounts. So 5C to be have a reference with 5I also. Next one is Next one is 5D, deemed supply under schedule 1. See, these deemed supply concept, you have at present you have 4 classes of deemed supply which are notified under schedule 1 of your CGST. That is supplies without consideration. A principal agent supply, any sale or disposal without receiving any consideration. So all those 4 categories which are listed out in schedule 1 of your CGST have to be considered here, because it is a supply under GST. Next one is 5E, credit notes which are issued after the end of the financial year but reflected in the annual return. See, there might be few cases where credit notes pertaining to the financial year 2021 could have been issued in the next financial year 21-22. So those cases, since we have the time limit up to September month return, there might be possibility of issuing it in the next 6 months in the subsequent financial year. So all those credit notes can be declared here. And trade discounts which is accounted in the audited annual financial statements but not permitted under GST. See, trade discounts which are not permissible under GST. See, as per section 15, when you look up section 15 of the CGST Act, the valuation provision, there are few items which can be included in the taxable value. There are few items which cannot be included under the taxable value. So when you provide any trade discounts for which GST is not leviable or GST is not permissible, those can be declared here separately. And 5J, which talks about the aggregate credit notes. Yes, we have completed this credit note. Sorry, 5K, adjustments on account of supply of goods by a special economic zone to a DTA units. This 5K, aggregate value of supplies by cess to DTA, for which the DTA units could have filed the bill of entry and they can declare those supplies here. So any bill of entry filed by the DTA unit, considering it as their inward supply. Such outward supply, they are not required to be reported by the cess unit in their GST return, and therefore these data cannot be retrieved from the returns filed by the cess unit. So these are the figures which can be reported in our GSTR 9C. Which might go for a possible difference between the turnover from your books of accounts and GST return. Next is 5N, turnover for the period under composition scheme. So there might be situations where taxpayers could have opted out from the composition because the prescribed limit of 1 crore and 50 lakh would have been exceeded. So they could have opted out from the composition. So for a part of the financial year, you may be under the composition scheme. So those turnover should be reported here, because unless you bring those turnover here, there will be a huge difference between your turnover as books of accounts and GST. There will be a huge difference. So you have to intimate those turnover made during the composition period also. And adjustments in turnover under section 15 of the CGST Act. I told you previously, section 15 deals with the valuation, and also the rules of valuation have to be considered. So if there are any adjustments because of the impact of this particular section, all those things can be declared here. An adjustment in turnover due to foreign exchange fluctuation. This happens in many of the export of service category taxpayers. They could have raised the invoice on towards the month end, 31st January or 20th February, whatever it is. But when the foreign exchange is being remitted, usually it get remitted within a week. So whenever it is getting remitted, the exchange rate differs. Not much of difference, maybe after the decimal it may 1 rupee or point something, it may get differ. So these difference should have to be recorded, because today you could have booked your value in GST as 70 rupee, but when you receive the foreign exchange it is 70.50 paisa. In those cases you have to book the difference here, you have to bring out the differences here. And adjustments in turnover which are not listed above. Again, this is a last residuary clause. In case if you have any differences which you cannot list it out from column row number 5B to 5N, you have the residuary clause to declare it in 5O. Again, the government later on came up with a few optional things in this table. See, table number, I think 5A. Yes. Table number 5B and up to 5N. If you are not able to pick these items, you can better completely consolidate and declare it in 5O. See, in case if you have 4 or 5 items from 5B to 5N, you are not able to pick up these, give input separately under each of these heads. For the financial year 2021, the government came up with a relaxation that you can categorize all those items in 5O and declare it on a consolidated basis. So after this, you will be getting the difference. If there is any difference, you will be getting the figures in 5R, unreconciled turnover, for which you have to provide the reason in the next table, table 6. You have to provide the reason for the unreconciled turnover. See, previously someone asked me the doubt whether in GSTR 9C do I need to report it. If GSTR 9C is applicable for you, you better just like that fill 9. You don't have to change it. Don't remove the value declared in B2C. Just like that, file the return, and then you have to bring it here. So there will be ultimately the difference between your books of accounts. Say it is 1 lakh rupee and your turnover as per GST will be 1 lakh and 50,000, because 50,000 erroneously excess declared B2C. So those 50,000, for those 50,000 you can provide the reason here in this part. Erroneous declaration of excess taxable value under B2C category, like that you can declare it here. This is a very correct method of declaring it in 9C. Otherwise, if 9C is not applicable, you better finish off everything in GSTR 9. Moving on to the next table, table 7. See, table 5, it is with the total turnover. Say it is either taxable or not taxable. Both are consolidated and declared here. And table number 7, we have to filter all the taxable supply and we have to arrive at the non-taxable supplies alone here. That is turnover for which GST or taxes are not paid. So you will have the annual turnover from the previous table. We have to declare the exempted, nil rated and non-GST or no supply. So all the schedule 3 transaction, negative list, non-GST supplies, neither goods nor services, everything have to be declared here. Zero rated supply without payment of taxes, for which we don't have the GST payment, and supplies on which tax is paid by the recipient on reverse charge basis. As I told you, any supply between the GTA, if it is taxable under reverse charge basis, the recipient is going to discharge the taxes. But for the GTA operator, this is going to be considered as an exempted income. So in 3B return, we will be declaring it under exempted category, and when coming to 9 and 9C, you have to declare it here because we have a specific category here. Supplies on which tax is to be paid under the reverse charge basis. Specific category is mentioned here. So finally, after you are filtering all those values, you are going to arrive at the taxable turnover. So total turnover after declaring all the exempted, nil rated, you have finally arrived at the taxable turnover. And now the outward supply portion is over. The reconciliation of your outward supply is getting over here. The next sheet, suppose if you still have any unreconciled differences, you have to provide it in the next sheet. Part 8, you have to provide the reason for those unreconciled taxable turnover. The previous page you provided the reason for unreconciled total turnover. In this page you are going to provide the reason for unreconciled taxable turnover. Please ensure the difference between these two. Next table, table 9. This table entirely deals with your output taxes. This is the bifurcation of all your output taxes paid. So rate wise you have to split up your output taxes. And even since you have paid your RCM taxes, though it is your inward supply, but still you have discharged your taxes from your side. So those items also have to be declared here, and that is why for every rate we have the RC mentioned here, reverse charge mentioned here. So 5% forward charge, 5% reverse charge, 12% forward, 12 reverse charge. We have multiple rates, 18, 3%, 0.25, 0.1, and from the previous year 1920 we had this introduction of this new row K1. What is this K1? Others. See, from 1/4/2019 we had the implementation of this 1% rate for construction service for land building flat promoters, building developers. So these people, when they are providing any constructing any accommodated for non-affordable and non-affordable segments. For affordable segments, the rate prescribed is 1%, and for non-affordable it is prescribed as 5%. 5% we already have the row option to furnish, but for 1% we never had. So the optional residual clause was introduced here, others. So if you have a rate, GST rate, which is not fitting under any of the above from A to K, you better mention it under K1 under the column under the row others. And also you have to mention any interest or late fee or any penalty that you have paid in your 3B return, and total amount declared here should match with the total payment and in your GSTR 9. So again, from where the information from GSTR 9 is going to be picked up? It is going to be picked up from GSTR 3B consolidated. So 3B payment consolidated brought into GSTR 9. Again from GSTR 9 you have to reconcile with your books of accounts payment here. So this is the payment table, rate wise payment table of your output tax liability. Moving to the next table, table 10. So for every table, whenever you have any unreconciled, you will have a option to provide the reason for those unreconciled. So likewise we had for total turnover, taxable turnover. Now we are having the space for providing the reasons for unreconciled payment of taxes. Suppose if you have arrived at the taxes here, which is not matching with your taxes in GSTR 9. If you have arrived at only 1 lakh rupee, but your 9 liability shows 1,50,000, then 50,000 is not paid as per your books of accounts. So you have to mention the reason here. Or this can be vice versa also, excess paid. You have to mention the reasons here. Why there is a unreconciliation in the payment of taxes. It has to be mentioned here. Next table, table 11, reconciliation of the taxes paid. So this is with reference to any additional amount which is arising because of the unreconciled tax payment. Suppose if you have found out while filling your 9C only, you have found out that few supplies have been omitted to be declared and for which you are liable to pay taxes, those additional liability which are arising because of after filing of GSTR 9 you have found out. So those additional liability can be declared here in this table. So this is only the reconciliation, additional amount which is payable but still which is not paid. So remember, whenever you declare any amount in this table, that is in table number 11, you have to discharge this on a voluntary basis. You have to use the form DRC 3 challan to discharge the taxes on a voluntary basis. Coming to table 12. So now the outward supplies is over and the taxes payable, output tax is over. Now coming to the inward supply, and you have to fill up this table number 12 by arriving at your input tax credit which is availed in your books of accounts. See, similarly like the turnover which you have provided from the audited financial statements, here also ITC availed as per the audited financial statements should be given here. As I said earlier, in case if you are having any multiple GSTN, please go with the trial balance and please arrive at the ITC which is applicable only for this particular GSTN. Here we cannot give the consolidated ITC for all the 5 entities together. Only the entity for which one particular GSTN for which we are going to fill 9C, that particular ITC alone have to be arrived. You can take the reference from the trial balance and the ITC as per books of accounts has to be declared here. And with this, along with this, you have to give few adjustments, 2 adjustments. ITC booked in the earlier financial year but claimed in the current financial year. So which means any ITC that you have not taken for the previous financial year but which is claimed in the subsequent financial year. Say for 1920 you have missed out few input tax credit, and finally in May 2020 you are getting an information that this ITC is being left out. So during the financial year 2021 this ITC has been claimed in your GST return. As per the books of accounts, it would have been already recorded in 1920. But for GST purpose, we have brought it under the next financial year. So those amount have to be specified here. And ITC booked in the current financial year to be claimed in the subsequent financial year. Similarly, for 2021, ITC could have been already taken considered in the books of accounts, but for GST purpose you have left out, you have omitted to claim, and subsequently it is claimed in the next financial year 21-22 before the prescribed ceiling limit time period. September month return, it has been claimed. So those ITC also have to be mentioned here. This is only to reconcile the ITC claimed in your books and the ITC declared in your GST return. So only 2 comparisons. And ITC, you will get the total ITC availed as per the audited financial statements. Now this will be compared with the ITC figure reported in your GSTR 9. So if you have any difference, that will be reported as unreconciled input tax credit, for which again in the next subsequent table number 13, you have to provide the reason for unreconciled difference in the input tax credit. Anything, it can be any valid reason also. And coming to table 14, so we have already completed the input tax part. Now the values of all the inward supply have to be reported. Now this is like entirely capturing your debit side of your P&L account. This is completely capturing your debit side of your P&L account. But now for the financial year 2021, the government came up with the relaxation that all those details table number 14 is not mandatory. It says table number 14 from A, 14B, sorry not A, from 14B to 14Q. If you are unable to give a breakup, you can just consolidate everything and declare it in one single head, maybe under others. So the government came up with the relaxation previously for the year 1920, and simultaneously it got extended to 2021 also. So you can just take the notification which was issued for 1920. In that you can see the applicability for 2021 also. So the breakup of all your debit side of your P&L account, from your direct expenses, from your purchases, how much amount of ITC have you availed, from your indirect expenditures like your freight, power and fuel, import, Rent, goods stolen, lost, how much amount of ITC have you availed? Conveyance, bank charges, entertainment, stationery, repairs, other if you are not able to categorize under any of these, you better go for any other expenses. Miscellaneous expenses under capital goods, these are all the categories which are mentioned, but as of now this table has not been prescribed as mandatory. It has been given as optional. Moving into the next table, when you have any unreconciled input tax credit, that is in because of the unreconciliation done in table number 14, if there is any figures which are reflected in unreconciled ITC, you can give the reason for that. This is similar to the table 12 unreconciled ITC, similar to same ITC going to be reflected here also, table number 14. And the same reason which you provided in table number 13, you have to provide the same reason in table number 15 also. The reasons for unreconciled input tax credit. The last table, table 16, reconciliation of the input taxes. Suppose if you have to pay the taxes because of this unreconciled ITC. So you only in 9C you come to know that you have availed some excess ITC, not matching with the books of accounts, you have availed some excess ITC. So in case if you have availed excess ITC, you have to reverse those ITC. So those reversal have to be done and you have to make the payment along with the interest. So those particulars can be added here. See, previously it was this form, since the auditor certification has been removed this year. When you take up the form for the previous financial year 1920, the words mentioned here was that auditor's recommendation on the reconciliation of the input tax credit. Now these words have been completely removed here, because now there is no more recommendation from the auditor. It is only purely a self-certification. So the taxpayer himself have to reconcile the ITC portion and then pay the taxes. If any reversal to be done, he has to pay the taxes along with the interest. And the last part, additional liability due to non-reconciliation. Suppose this, if you have any liability output taxes to be paid, again the words mentioned here previously was the auditor's recommendation for additional liability. Now those words have been removed and replaced with additional liability due to non-reconciliation. If you have to pay any amount and you ultimately only disclose, find that in 9C, you have to discharge it by way of DRC3 challan, voluntary payment, by disclosing those amount in this last table. Rate wise, output tax have to be listed out here. And last certification part was completely removed for the financial year 2021. So part B is completely removed in this form. So this is with up to GSTR 9C reconciliation part, self-certified statement, which has to be prepared and uploaded by the taxpayer himself. So with this, I am coming to the end of this session. I just want to know if you have any doubts, I can answer you.
பண்ண போறீங்க உங்களுக்கு நான் வந்து இது கத்துக்க வந்தேன் சார். Ma'am, I think some of the questions are posted in chat.
Yes, ma, I will take it up. Okay, difference between non-GST supply and no supply. See, previously when the schedule 3 was given in the CGST Act, they have not mentioned anything about the no supply. But subsequently this category got added, no supply category. See, they were mentioning few items like this overseas sale, the sale which is done in the middle of the sea. So the recipient, the importer, before making the customs clearance would make the sale to some other person, some other party. In those cases, this will become a no supply item. It has been listed out. Later on, it was getting added under the category no supply. Non-GST supply, any item that is not leviable to GST, any goods or any services that are not leviable to GST, like your sale of petroleum products, petrol, diesel, crude oil, etc. All these are non-GST supplies. The meaning is same only, but subsequently no supply been added to list out a special category like overseas sale. But both the things have to be declared under non-GST category only. Both will come under not leviable to GST category only. Okay, Shakti Prakash have asked me, is there any possibility that there may be difference between GSTR 1 and 9 auto calculated data? Yes, there will be, definitely there will be difference. See, suppose if you in your GSTR 1 which you have filed for the financial year 2021, you might have included some items of 1920 also. You could have omitted, and since you have the time limit up to September 20, you could have brought those things under GSTR 1 for the financial year 2021. But when your system is picking, when the information is going to flow from GSTR 1 to GSTR 9, system will eliminate all those based on the dates that you have mentioned. System will eliminate those category, those transactions which belong to 1920, and it is going to take only transactions pertaining to 2021 alone. So definitely there might be possible differences. You have to match between these two. Okay, Jayashree have asked me, is it mandatory to declare the HSNY summary of outward supply? Yes, ma, it is mandatory, because we had a notification in the middle of 2020. We had a notification issued saying that 4-digit and 6-digit is mandatory. 4-digit for categories below 5 crore and 6-digit for categories above 5 crore. Definitely it is mandatory. And GSTR 1 also, every month we are mentioning it now. So you can just consolidate those information and declare it in GSTR 9 also. Is unbilled revenue essentially advance received especially for goods, as it can't be? No. See, advance received is entirely different from unbilled revenue. See, advance received cases, what will happen? Of course, advance received is only for services, not for goods. If you recall the notification number 66, you will clearly know it is only for services, not for goods. And in the case of advances received, it is entirely different from unbilled revenue. Advance received, what will you do whenever you receive the advance? But the supply would not have been done at that time. Maybe you are going to raise a tax invoice only on a later date. But since advance is also a taxable supply under GST, that date itself you could have, based on the time of supply provision, you could have recorded this as your advance received under your GST returns. But these advance received will never be considered in your books of accounts as a turnover. That will be only kept as a current liability item, right, in your books of accounts. So recorded in GST, not recorded in books of accounts. That is advance. But unbilled revenue recorded in books of accounts as per the accrual basis of accounting. But it is not recorded in GST because the supply or nothing have been commenced as on that date. There is not even any intimation of any commencement of a contract on that date. So in GST it is not recorded, but in books of accounts it is recorded. Both are vice versa. Both are opposite. You please understand the meaning very clearly. Unbilled is recorded in books of accounts but not recorded in GST. Advances is recorded in GST, not recorded in books of accounts. That is only the difference. Okay. Okay, any more questions?
More questions? Mahata? That's, you can propose.
I take immense pleasure to deliver the vote of thanks for this event, workshop on GSTR 9 and 9C. I thank brand chairman CA Satyanarayanan sir, Sikasa chairperson CA Madhumita ma'am for organizing such an interesting event for the benefit of the students. I thank speaker Bhuneshwari ma'am for providing us with such a valuable session. I thank all the participants for their extreme cooperation and participation. We expect the same level of participation in all the upcoming events. Thank you all.
Thank you, Mahata, and I thank my sincere thanks to Madhu, Sikasa chairperson, and our branch chairman C.S. Satya sir for this wonderful opportunity to have the very first session on GSTR 9 and 9C. Thank you.
Thank you. It's a wonderful session.
Thank you all the participants.